The credit crunch is happening. Yes, it is finally here. And I'm going to talk about what it means and where we're headed in this economy. Hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ, and thank you for being here. It's July 24th, 2023. Putting this one out a little later at night. So if you're watching this on the 25th, don't bash me for getting the date wrong. You're just probably not up as late as this video is coming out, which is not too late, between 8 and 9 Pacific time, so maybe midnight Eastern time. Anyways, let's talk about the big news, in my opinion, here, and that's the credit crunch. Now, we know that this entire what's been discussed as, or what's been labeled an economic boom, is just about entirely based on people borrowing money they don't have, spending money they don't have, rather, borrowing money, spending money they don't have, buying things that they normally couldn't buy, and therefore it was looked at as an economic boom. But the repercussions of all this money creation and lending has been outrageous cost of living / inflation. So now we're seeing some deflationary forces hit, also known as the credit crunch. When credit is more difficult to get, when it's harder to take out a loan, you start seeing price corrections, right? So we still have some issues to deal with as far as the supply chains go. And manufacturing is getting worse every month as far as what we produce here in the United States. But here's some information here, some news on the auto loan, not just delinquencies, but the approval rate, people trying to get automobile loans. And this is interesting because vehicle prices have actually come down some. They're down roughly 5% year over year, I believe, for used vehicles, not so much for new vehicles, according to the Manheim Used Vehicle Index. But even with lower vehicle prices, more people are getting rejected for loans. And this data comes to us from the Center for Microeconomic Data. And let's hone in right here on the rejection rate. And as of June, we don't have the July numbers yet because the month is still ongoing. But as of June, we saw the rejection rate for auto loans increased to 14.2%. It was only 9.1% back in February. All right. And this goes right along with the fact that so many consumers are tapped out and the pool of eligible buyers is drying up, right? So this economic illusion is going to be turning into economic reality right before our very eyes here in the coming months. And with so much leverage out there right now, so much debt, and the gap between incomes and the cost of living, it's it's going to be very, very noticeable, right? So expect further weakness in car prices, and we see real estate's going to be coming down as well. Hopefully, the manipulators of this economy will take a hands-off approach and actually let bubbles burst, and hopefully let declining prices happen without interference and new programs to stop prices from correcting. Now let's talk about the stock market. The stock market continues to ignore the economic threats that are here and both looming economic threats with a default tsunami, headed our way here. It's on our doorstep and it's headed our way very, very soon. Another day that the stock market was all in the green, all major indexes in the green. We know they have unlimited currency creation powers right now. So will they use that to keep the stock market propped up, even as everyone else is suffering financially? We'll have to see. But I think at some point it's going to be too obvious that the disconnect between the consumer and the stock market, that they're going to have to find a reason to bring the market down. Now we're going to take a quick pause, about 1 minute here, to hear from our sponsor. And I've got another very important news update right on the other side, but take a listen. This is very important. It has to do with protecting your wealth and possibly even growing your wealth. Take a listen. The US dollar has lost 85% of its value since the 1970s, when the dollar was decoupled from gold. And the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that is proven to withstand recession, inflation, and just about all other economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You'll also get a 24 karat quarter ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com. Link down in the description of this video. Noble Gold, the only gold company that I trust. There's always a risk of investment and there's no guarantee of any kind. All right, now still on the stock market here for just a minute. Let's take a look at this Forbes article. Let's talk about what JP Morgan came out and said. They said the AI-driven bubble, that's artificial intelligence, may burst and drag down the stock market. So what they're trying to say is there was all this optimism and hope because of AI and how much more profitable it's going to make the companies. They're going to say that people overestimated AI's bullish impacts on companies, and they could use that false optimism as a way to bring down the market. I still think it's going to be some sort of shock event, if you will, with a war, with something big happening on U.S. soil, where the grid goes down, blackouts, nationwide, something like that, something major. But we'll have to see. It's anyone's guess, but we know that the stock market typically takes a staircase up and then an elevator down. Things usually correct so quick, most people can't get out. But you can bet the people at the inside, the top 10 percenters, the whales, so to speak, they will be out just in time to escape the carnage. And most people that are just sitting passively with a 401k investment will watch their retirement get pummeled. And that's why I've already allocated a big part of my retirement, one into a money market and then two into precious metals. So I'm pretty well diversified, hardly any stocks in my retirement. That's just me not giving any advice, but that's where I feel that type of allocation is how I feel the safest as far as investing goes. Let's talk about more bank drama here. We've got FDIC basically scolding banks for manipulating data. When people were panicking after the bank failures that happened back in March, they were pulling their money out of the banks. Well, a lot of banks falsified the numbers to make it look not so bad. So even what we reported here, those record outflows, people pulling their money out of the bank, was actually much worse than even we reported on. All right, and this is the Wall Street Journal reporting this. Should be no surprise to anyone. We see everywhere you look, it seems like in the financial world, manipulation, price rigging, so to speak. And I think most of us know all the financial numbers are tampered with, and the books are cooked in many cases as well when it comes to financial reporting. All right, let's talk about what's coming up this week here on Wednesday with the meeting there to decide what's going to happen with rates. The consensus is, for most people, for most analysis, is that the powers that be are going to do a rate hike. And they're supposed to signal that there's going to be more rate hikes. They want to instill confidence that the economy can withstand more rate hikes. But on the other hand, are they going to look really bad when things start crumbling even faster than they already are, with the rates even higher than they are right now? In our last report, we talked about the massive credit card debt, the massive rise in the average credit card interest rate, and it's going to cause a lot of trouble for consumers. All right, folks, so a little bit of a shorter one today. Thank you for joining in. What do you think about this news here? What do you think about the credit crunch and the people now getting denied for loans? It's really ticking up as far as the number of people getting rejected for loans. How's that going to impact prices? You know as well as I, it's going to be prices going down unless they find new ways to get people to borrow money or get approved for these loans. Some bubbles are beginning to burst, and we're going to see how it plays out. But we're going to wrap this one up here. A little bit of a shorter one today. Thanks everybody for being here. Keep stacking. Bye for now. Peace.